What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers up here on the left. We have the broad market comprised of SPY, the Qs, and IWM. After that, we look at some companies. We have Apple, Netflix, Tesla, Alibaba, Facebook, NVDA, Microsoft, and Amazon. Many of our companies have already reported earnings with the exception of Alibaba and NVIDIA, and I think most of the moves that they've made are pretty self-explanatory, so we'll just hop right in. But before we do, I do want to just make you aware that all of our free resources are linked down below in the description of this video, and if you find it useful, feel free to share it with a friend. That way they might learn something new also. Jumping right into our SPY weekly chart, I think the first thing to point out is quite clearly the structure of this week's candle, which is a full-bodied green candle, very little upper wick and lower wick, indicating to us that the bulls were able to close all the way up at the highs, so they were in control all week. Very bullish sign, and especially the fact that now we are breaking out of our weekly bull flag that, just as a reminder, looks something like this. Now that we're breaking out of that, it's just so evident that the all-time high target up here at 339.08 is what we'll be watching for this upcoming week. So if we go there, look for a potential little pullback off of that area. But if this is truly a weekly bull flag breakout, so if we're breaking out of this range, then I think the true projections would be a doubling of that range, which would look something like that. That might be a little bit much, but ultimately, I think if we go higher than the all-time high right now, 350 is sort of, or just below it anyways, is sort of the area that I'm targeting here before we start to see another major pullback. If, again, we can maybe see a smaller pullback here, break through with some more strength, I think 350 makes for a nice upside target as a psychological resistance as well. Let's break it down on the daily for some more key levels. So we did close our gap that was up here around 332.58. That has now been closed. We've removed it from the chart, but in its wake, you'll notice that we have also left two gaps below us now. So that's important to carry forward. We have below us between 331.25 and 330.08. Lower than that, we have 327.90 and 326.63. Those will act as supports on the way back down. And certainly if we do start to break that back down and get into those gaps, look for the gap fill to happen quite quickly. They're rather small gaps compared to the massive one that we just filled to the upside. So I would be watching for that on any sort of downside movement. Anything lower than those gaps, and we're looking at our next support below at 322.86. And again, that would be pretty aggressive of a pullback for this week. It would take some pretty strong selling there, but I do think, again, based on the weekly time frame and the fact that we already covered that we're breaking out of the weekly bull flag, the likely scenario is that we come up and retest our 339.08 all-time high here on SPY. Anything above that is going to be blue sky levels, whole and half dollars, as well as any intraday levels that do form. But again, as we've already sort of pointed out, a move here, a little pullback maybe into the support trend line, and then a breakout higher. And again, some longer term targets are up around 350 if we do see that strong move over the all-time high. Moving over to the Qs now, you can see that we're sort of pulling back off of the upper end of our resistance portion of the bull channel that we're in. We didn't quite make it all the way up there, but we are still holding on to our previous all-time high support here at 269.76. We will mark in that current little resistance area up here. It looks like we got kind of rejected closer to that 274.75 level as opposed to that new all-time high up there at 275 whole dollar. But if we do go back up there, look for a breakout higher. Again, if the SPY continues higher, I think it's likely that the Qs at least go and retest their upper trend line of the bull channel. So look out for that as resistance above, as well as any blue sky levels, of course, whole and half dollars, intraday levels that do form. To the downside, though, if we break down and see continued downward momentum early on in the week, which again, I'm not really predicting that that might happen. It was kind of a sell-off there on Friday, but that was after 4 consecutive days higher. So we have strong support below. We're currently sitting around right around 269.76. But if we go lower, we have a support here based on previous resistance, then turned to support, 268.16. If we go lower, there's the gap fill to our prior Friday's high in this sort of dragonfly doji, if you will. That's down to 265.92. Anything lower than that, and we have this level in here around 262.77. I do want to point out that we have now broken above our resistance trend line here, so we'll get rid of that off of the chart. And again, that sort of pretties things up a little bit, makes it a little easier to look at. Anything lower, again, as we sort of mentioned, we will be getting into that support trend line of our bull channel, which is resolved so many times in the past. I would sort of expect it to do the same thing again, but again, anything could happen, so monitoring that closely. If we do get down into it, it would be, a good risk reward to take some calls there, maybe go long some tech companies looking for that bounce, but if it does break, we have a clear stop loss in place just below that support trend line. And last but not least, checking in on IWM, Russell 2000, and our small caps. I just want to point out the fact that we mentioned our consolidation range in last week's video, and we did finally start to break out of it, and we have doubled it up to the upside, which we targeted here at 153, and we've even gone higher. So I was sort of skeptical of getting that big gap up over our support trend line, but anything can kind of happen in the market, and right now we are trading back above it. So that is noteworthy. I think, again, the continuation here is in play, especially given the fact that we've broken out over this previous high. We had a day of consolidation, then boom, made a move higher. So I think the target here wants to be 160 whole dollar. Anything above that, there's really no market structure if we scroll back. Very, very choppy in here, not a whole lot to go off of. So we are looking at a move up to 169.04 next after that. I'm sure some intraday levels will form in here, so definitely play those, but that's our next ultimate upside target. To the downside, though, if our 153.37 breaks and we see some sort of rollover here, we have a small gap, as do most of our charts now below us, at 151.79 to 150.90. So look for that to fill quite quickly. If we do get any acceptance into it, should be a nice snappy little gap fill reversal off the bottom there, in which case I would retest that 153.37. But if that doesn't happen and we continue lower, supports below are going to be the top of our balance area, which was in here. Remembering that's at 149.11. Anything lower than that, there's sort of a midway point there at 146.87 and then 145.08. But again, I'm just sort of pointing these targets out, but I do think the move, especially based on the action here on Friday, wants to be a retest of that 160.07. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and also subscribe to the channel. That way you know every single time I drop a new video. So jumping right into our Apple chart, I first want to make your attention one more time to the fact that we will have a split coming up at the end of August. So if you have one share, it'll turn into 4, and Apple's price will be somewhere around the ballpark of about $100 or so. But anyways, based on earnings and our move here, we are finally starting to see some sort of a pullback. The first red day actually after, the huge gap up that started this whole move to the upside. Anything over our first or our new all-time high here at 457.65, we're going to be in blue sky territory, so whole and half dollars as well as any intraday levels that do form. So that's the easy part, right? But to the downside, we did just break out of a symmetrical triangle here, and the breakout on Thursday has been retraced almost 100% on Friday, sitting at a key support here at 441, almost the whole dollar there. So if we get a move lower than that, then what we're watching for is a move down to the top of our gap here at 432. That gap should fill quite quickly down to 425.50, just about right there. And then I would suspect some chop in this area just because of the sheer amount of volume that was traded here on the earnings day gap up. I think plenty of people will be fighting to keep their positions on, or some will be liquidating them. So I think that push and pull will cause the market to chop around in this area. But if we do go lower, just some targets for you to be watching. We have key market structure here in between our sort of gap. So that is anything under 403.80. I'd first be watching for that triple top to act as some support at 396.57. Anything lower than that, though, and then we should get our full gap fill all the way down to 385. So Netflix was actually a little bit of a heartbreaker there on Friday. We were watching for the breakout over our 510.85 level, a little pressure cooker top, for a nice swing up to our 528 level. That didn't happen, though, and we instead got a breakdown. No worries, we didn't get the position. There was no confirmation of entry. So some targets here, now that we are sort of breaking down out of our little 3-day range, if you will. We're looking to double that range to the downside, which we sort of did. We hit our target down here at 488.58. If we continue lower, though, and that breaks, we have our next support here at 480.44. Do keep in mind that that 50 SMA, the blue line here, will start to catch up with that as we trade throughout the week. So it should provide a super support depending on the time of week. But if it breaks and we go lower, our next key support below is at 467 whole dollar, as noted by some of our previous resistance and support in this area. To the upside, though, if we do get a crazy swing back up, we'll first have to fight back up through our 497.08. Anything above that and our pressure cooker top will still be in play, and we'll be watching for that breakout above 510.85 for our swing up to 528.04. Anything over that, and you can tell there's really no market structure up in the area of this chart, so you'll probably have to play some intraday levels, but the ultimate swing up to the all-time high could be there if we do get a strong move up across tech, across the board. So Tesla hasn't really been impressive to me after earnings. Maybe I'm just used to all these crazy candles that were going on over here, but it's really not been doing much. It's really been going sideways in terms of overall consolidation, if you will, sort of staying in and respecting this box. It might be a little bit better drawn as something that looks like this. You might even call it actually a descending triangle where we have a support in here and a bit of a resistance trend line developing that looks something like that. So watch out for that. If we do break down below our flush point, which is going to be down here at 14.18, then I think things could potentially get nasty. We've talked about the poor structure that remains below, but we'll first make a move back down here to 13.6461, anything lower than that, and then our poor structure commences. So first gap here, and then second gap here. I won't just bore you with those numbers. Anything lower, of course, we have 10.1955, the ultimate breakout zone from back here. I'm not saying Tesla has to go back down there, but this descending triangle is starting to worry me just a bit in terms of, will we see that upward continuation here? But if we do, say we see a move over our resistance trend line, something breaks, we have a filling up the triangle. Of course, we talk about how that happens, something like that. So we'll be watching for a move up here to 15.4891, anything above that, and we're looking for our 16.52 level and this sort of area of resistance in the chart to start to act. Anything above that, of course, we have our all-time high. Not saying we make a move all the way up there, but ultimately here on Tesla, what I want you to be watching for is a break of this sort of descending triangle here. If we go lower, targets are mapped out. Go higher, targets are still mapped out. So Alibaba is one of our companies that is still yet to report earnings, so watch out for that around mid-August there. What we're looking at right now is a pretty significant red candle there, but bouncing off of a key support level at 248.33. So we'll see if we get any more continued bounce off of that level. This is almost a hammer, not quite. It's sort of lacking the smaller body that we'd really want to see. But if we do see that continuation upwards, watch for a move up to 257.73. Anything over that, and we're looking at a swing up to our swing highs in here at 265.69. Say we do get that downward continuation though, and that this wick doesn't really provide very much support here. Any break of our 248.33, and we're coming back down to this support, which is going to be our key one that we don't want to see break if we want to be long here, just because of all the touches that we now have. So we're starting to call this a flush point. If we go lower than our 241.54, look for a move to that 50 SMA, which will be sort of mid-range. Anything lower though, and we have the top of our gap at 232.75. And very similar to what we saw on Apple, there is a little bit of a level here at 231.02 before we fill the gap all the way back down to 224.93. But again, based on the structure of this week's candle, you're really going to be watching early on in the trading week whether or not this wick provides any more support to the upside, or if it doesn't, then a retest and break of this flush point will bring us back down to our next flush point at 241.54. So Facebook is another one of our crazy movers that sort of happened after earnings. So we got the huge gap up that we've talked about already. So that gap is in here. It's not marked off in yellow. It's a little bit sloppy. It's sort of been partially filled, if you will. So anything under our, the gap is essentially between anything under 247.16. Gap fills down to the high of our candle here at around 234.65. So watch out for that. Should we see any sort of major little breakdown here, again, just like the rest, there is a key level in between, especially with that 50 SMA there coinciding for a super support at 238.07. But based on the structure of the chart and what we're sort of looking at here, I'm not necessarily sure that that's going to be in play. Sure, we do have a pretty nasty looking inverted hammer candle that's printed there on Friday. I'm sure, this huge move, you've probably heard about TikTok and all of that nonsense. So we'll see ultimately what happens, but I am sort of led to believe that we do want to see a little bit further of a pullback to potentially retest our 256 level. If we go there, I would watch for a little bit of a bounce off of that level, some sideways consolidation as we develop value a little bit higher. But if that breaks, then watch for, again, some chop to happen in here, just because very similar to Apple, think of all the volume that was traded on that huge gap up day. People will be fighting to either keep or ditch their positions. That push and pull, again, should cause some chop in this area. So that's what I'm watching for. Anything lower than that, we sort of already covered that gap fill area, especially with that key level in between. To the upside, though, if we do get a breakout over the all-time high for some reason, although I'm not quite favoring that based on this upper wick here, but anything over that 278.89, blue sky levels, $1.50, as well as any intraday levels that form. And NVIDIA is one of our last companies as well that is yet to report, so watch out for that mid-August. What they're doing right now is a nice little uptrend. We did see sort of a breakout of this area of the chart, so we had something that was looking like this, and we broke out higher. Once we got above that resistance and the resistance level at 421, we were able to see a nice leg up. So right now we're watching for that pullback, some consolidation to happen and to digest that move. We don't want to see ultimately a breakdown all the way back down and a retracement to 421.02, but I think any sort of sideways action up around or just below the all-time highs would be healthy for a potential move higher come earnings. I think that might be in store here. So anything over our 460.19 level is blue sky levels, $1.50 intraday levels that form. Anything below our 421.02 level, and we start to look at a break of our support trend line, which is not ultimately what we want to see, but it would cause us to, again, one more time, fill up the triangle below. Our next level, especially with that 50 SMA right now, is going to be around 391.55. It will start to creep up and find some, I'm sure there will be a support in between our range here and here. So watch for that, but ultimately 391.55 is the next key support below. Anything below that, and we're looking at our previous breakout level here at 380.35. But again, based on the strong uptrend here, we did see a nice move up. I think sideways consolidation is in store, and then a potential breakout higher on earnings. So Microsoft is one of these ones that sort of had the gap up and sideways action as the market tries to digest the move. So right now what we're watching for is a break of this range that we're sort of stuck in. So we're trading in something like this. A move to the upside and a breakout higher would put us somewhere here, and a breakdown lower would put us somewhere in here. So if you look at what that means in terms of downside, let's just cover that first since we have a red candle on Friday. A breakdown and a move lower would ultimately fill the gap that was left in the chart, and that move would be all the way down to 205, just about the whole dollar, remembering that there is a key market structure level in between there at 208 the whole dollar, so watch out for that on any sort of downward motion. But if that does happen, we will be getting back into that support trend line. I would expect a bounce out of that area. If that doesn't happen and the move is up though, we will first have to battle back up through our sort of resistance area up here around 215 the whole dollar. Of course, there are some levels slightly higher. Let's just map that in so we are aware intraday. That level is going to be somewhere in here, around 216.39, and of course 217.64, the all-time high, but we'll just be in blue sky territories. And if we do the doubling of the range to give us just a basic idea of where we could potentially head, do something like that, and then look at where that lands us, we're sort of in the ballpark of 222 as targets to the upside. So watch out for that. But again, one way or another, targets are mapped out. And last but not least, checking in on Amazon. It looks very similar to Tesla in the sense that it's kind of opposite, if you will. So instead of a descending triangle, we actually have an ascending triangle, something that could look sort of like this, very sloppily drawn in with that support trend line. But you get the point. What we're forming here is a bit of a pressure cooker top. 1, 2, 3, 4 touches now to this resistance area at 32.4594. If we go higher, I think the move is at least to the all-time high. Watch for a little pullback. And again, a move much higher than that should we get underway in that direction. I think it's very similar to what's going on in SPY, actually, if we do get that retest of the all-time high. If we don't, though, and we see any sort of more breakdown here, again, really having a lackluster earnings, just sort of going sideways, but we'll do the same thing we did on Microsoft where we have a consolidation range. If we double it to the downside, we're looking at a move back down to key support just about, which the 50 SMA will start to coincide with. So definitely watch for a bounce if down is the direction. But I think the support trend line is intact. It's acted quite strongly in history. And I think, again, the pressure cooker favors a move to the upside, at least over the all-time high. So watch out for that. But targets to the downside, of course, will do 30.88. Anything below that, 3,000 psychological. 50 SMA will be mid-range. And anything underneath that will be 27.81 whole dollar. So that's going to do it for this week's episode of the Weekly Watchlist. If you enjoyed the video or learned anything new, feel free to let me know in the comments section or just by leaving the video a thumbs up. Feel free to share it with a friend. And with that, I wish you a green trading week.